It's Sarah Stokes with your latest mortgage market update. Let's dive into the key economic data that could impact interest rates and the housing market. This past week, retail sales and consumer spending came out. Full retail sales met expectations at 0.3%, a recovery from last month's 0.6%. Overall retail sales came in lower than expected at 0.2% compared to the 0.6 that was forecast. However, it's still an improvement from the previous negative 1.2%. This tells us that while consumer spending is stabilizing, it's not surging. This is something the Fed is watching closely in its fight against inflation. Later in the week, crude oil inventories came out, higher than expected at 1.745 million, suggesting more supply than anticipated. This could help keep gas prices in check, which is a small win for inflation, or it could have the complete opposite effect, so keep an eye on that. As far as the Federal Reserve and interest rates, the FOMC met and released economic projections on Wednesday, giving us insight into where the Fed sees the economy heading. As expected, the Fed held rates steady at 4.5%, signaling a wait-and-see approach before any potential cuts or hikes. There are 2 anticipated cuts coming in 2025, so keep an eye on that. Labor market and manufacturing. Later in the week, jobless claims came in at 223,000, right in line with the forecast, showing continued labor market strength. The Philadelphia Fed Manufacturing Index dropped to 12.5 from 18.1, slightly below expectations. Housing market update. This is awesome. Existing home sales exceeded expectations at 4.26 million, up from the previous 4.09 million. This is great news for buyers and sellers, indicating a strong demand despite higher interest rates. What does this mean for you? Well, with the Fed holding rates steady and consumer spending slowing, we're keeping an eye on future rate cuts, which could bring relief for home buyers later this year. If you're thinking about buying, selling, or refinancing, let's talk about how these updates impact you. Like and follow for more.